largely focused on equities, and I know that your primary focus on the vol side is on equities, but what are you seeing on some of the other major asset classes? Obviously, the vol we've seen so far this year in treasuries, gilts, I mean, the whole sovereign bond complex has been pretty remarkable. We haven't seen something like that for some of them for like 30 years. It's been, I mean, historically, we've never seen anything like that. So what are you seeing, and perhaps some of the things that might be flying under the radar of most investors from a market structure, vol perspective?
Yeah, the 10,000 pound gorilla in the vol space has always been equity vol. And hedging broadly kind of has been in that area. And so, this is part of why dispersion works so well this year, this vol dispersion. A lot of people are talking about it and kind of trying to understand why. And we were out front being very vocal that, look, people are hedging the equity vol space in the S&P 500, for example. But single name equities are not where the hedge is. You're going to get much more, much less reflexive pinning in the single names and much more reflexive pinning in the index itself. So you're seeing things kind of flying around on the exterior while the index itself is actually kind of not moving as much, or at least early this year that was the case. And the same thing applies cross asset. Right. So we were very vocal about a year and a half ago. So, I think it was on the derivative podcast. There was, what is the best way to hedge this? And the answer was interest rate vol, right? Or FX vol. And sure enough, those are the two things that have absolutely gone bonkers, right? Haywire. FX vol, actually, in particular, interest rate vol as well. And the answer, the reason we said that is, again, because that's where people, A, weren't hedged, and B, that's where the most international cross-border kind of risks exist. If the dollar continues to go up, that's where things break as well. So it's been, I still believe that's, those are the places where things are most likely to continue to break. FX vol, I think, is a great place to be after being a pretty quiet, sleepy place for a long time. Those have been great secular trades. Now, I will say, people are now, we were talking about that a year and a half ago, people are now kind of a little bit more wise to this and are hedging less in the indexes, as we already referenced. And, they're finding other ways to try and find hedges, whether it's through single name hedges, through FX, or interest rate vol, et cetera. And so as that happens, now you begin to, unpin maybe kind of where the kind of the corks in the dam, right? That thing starts to loosen a bit. And we've been talking about this more actively lately. On the back end of the seasonality, this market still has a lot of risk. And the higher we go, the more potential energy we have in terms of realized vol, given kind of all the macro things at play. And the less we're seeing, these hedges on the downside are not coming back. And so we do believe that, ironically, the new hedge is the one that didn't work, which is actually equity. I think vol is actually going to have a big 2023. And again, I'll reference this podcast in a year when we talk about that.